Good afternoon, and welcome to our panel where we're going to start talking about how we're going to pay for this pandemic that we've been suffering for the last 15 months. Politicians across the world have thrown money at the problem, more money as the pandemic and its economic impact has evolved. The public have loved that response. The economists have debated it. But the people that you see in front of you today are people at the sharp end of it. They've had the challenge of actually getting the money to pay for COVID responses, specifically from the markets. And this is at a time when those markets have volatility, where investors and bankers are adapting to new working practices, where fiscal rule books are being rewritten, and perhaps worst of all, where the amount that is needed to fund the governments has been fluctuating wildly. Volatile times in the quite speed world of sovereign debt management. Let me very briefly introduce to you the panelists that we brought together to discuss this challenge. Cristina Casalinho is the CEO of the Portuguese Treasury and Debt Management Agency. Pablo de Ramón-Laca Clausen is the Director General of the Tesoro Público in Spain, and Spain was incidentally in the market this morning with an extremely successful 10 billion euro 10-year deal. Many congratulations to that, Pablo.
8 billion.
8 billion, 8 billion 10-year, I'm sorry, I said 10 billion 8-year. Josh Frost is Deputy Assistant Secretary for Financial Markets, the US Department of the Treasury, with responsibility for the debt management policy and capital markets area. Davide is the Director General of the Ministry of Economics and Finance. I'm not going to try and pronounce that in Italian, and was incidentally recently named the most impressive sovereign funding official of the year in the Euromoney Awards. Congratulations for that. And last but not least, Anthony Requin, the Chief Executive of the Agency of the French Treasury. Thank you all very much for joining us today. Pablo, as you have a deal in the market today, I will start with you, if I may, and simply start by asking you, look, the market expects consistency, it expects transparency and predictability from debt management officers. It's been incredibly difficult this year. How have you managed to maintain consistency and transparency with an ever-changing target?
It's a tricky balance that you have to achieve because your tax revenues develop, surprise on the upside and the downside as the year goes by. Our approach is that we prefer to be as predictable in our revisions as possible. And so we prefer to start extremely conservative with a view to making it much more likely that by summer we will be able to reduce our funding program. This allows us to take advantage of the fact that the first couple of quarters of the year are the most active. So we are able to issue a lot in Q1 and Q2 and start to wind down during the summer, and Q4 finishes the year at a much slower pace. So this year, for example, we have announced 100 billion in net terms. And even though Q1 has been slower than we had expected because of vaccination and pandemic development, we will probably be in a position by summer to reduce this funding target of 100 billion. And this is what we've been doing for the past few years. Despite the uncertainty, we have been able to announce more reductions in our funding program than increases in our funding program. We think that the market appreciates this certainty of behavior, and we think they appreciate by summer to be told that there is less work to do than there is more work to be done. So this is how we approach it.
It's a fine idea of creating a sense of scarcity as you go through the year. Not always achievable though. Davide, how has it been in Italy? How's your funding needs developed?
Yeah. So first of all, thank you for inviting this important conference. Well, this situation of unpredictability of total funding, of course, is not just of this year. I would say it was much worse last year when we found ourselves with the start of the pandemic, and we have this massive increase of funding that was needed. But I mean, we knew that it was massive, but we didn't know exactly for how much. So what we did basically was to, first of all, update our guidelines. We normally publish at the end of each year the guidelines for the funding of the following year. We never update this funding during the year. And so last year was the first time we did that. It was really an exceptional event for us. And we did that exactly to make people understand, make investors understand how we were coping with this need for additional funding. And then over the months, we've been trying to be as much transparent as possible in trying to understand what was the cash impact of all the deficit widening measures that were adopted by the government. And we have been following the same approach also this year, where the predictability is kind of higher because, of course, the budget that we approved at the end of 2020 for 2021, there was much more clarity regarding the situation of the pandemic. Pandemic was not more a surprise. It was well priced into our budget. And so we were able then to be more predictable versus the market. But of course, even this year, we had some not unexpected deficit widening measures. And so again, we re-engage with investors and try to understand what the impact of these additional measures would have been on our total funding, because sometimes some deficit increase does not mean that is exact the same amount in terms of new cash to borrow. So we have to, translate these measures into the impact on cash funding. And this is the exercise that we do very, very frequently with investors, try to update them as much as possible. And so now we think we are in a situation where there's no need for further measures so far. So we think for the rest of the year, we are able now to show more predictability than that has been so far.
And Cristina, has it also been the same case for you of revisions to the target over the course of the year and communicating that to investors?
Well, yes, we have not, our focus in terms of predictability has always been to keep investors informed of possible changes. So for instance, for last year, in April, May, we sent an update of our quarterly funding program, saying that at that point it was impossible for us to be able to provide a final number on the absolute amount of increase of the borrowing requirements. But we did that at a later stage. And at that time, what we did was we provided evidence or some indications of our funding strategy would change, in the sense that flagging to the market that our auction sizes we need to increase, and that also at the same time we also indicated that some auction windows that we traditionally skip would be using them. Also this year, and also following a bit what Pablo has mentioned, we also trying to front load as much as possible the execution of the funding plan. And also, as it happened last year, we anticipate that the budget outturn will evolve positively. We have seen that tax revenues have been surprising positively, and so we also anticipate to have the funding plan to be scaled down, not significantly, but at the margin for the rest of the year. And so these actually poses significant challenge. We faced something very similar last year, and in the end, the only available instrument that we had to adjust for the better performance of the budget was to cut significantly the issuance of T-bills. And we believe that this is an instrument that is more readily available to adjust for both negative and the positive surprises arising from the execution of the budget.
T-bills. And Josh, the US Treasury has always been a model of transparency and predictability in issuance. It's been a vital part of your policy. More difficult than ever this year?
It's a great point. I mean, our North Star in funding is to fund the US government at the lowest cost over time. And the way we try to accomplish that is by taking what we call a regular and predictable approach. There's an inherent contradiction, I think, in the phrase regular and predictable when funding needs are so uncertain. But the way we typically do that, so our overall framework and approach didn't change despite the pretty notable change in borrowing needs. We continue to think of our suite of products in kind of varying degrees of how we might modify the scope and size of what we're issuing. And very specifically, we tend to think of Treasury bills as our shock absorber, much like Cristina just mentioned, where if we have a pretty significant change in funding needs from one quarter to the next, 1 year to the next, the shorter the time horizon, the more likely we are out of necessity to respond quickly by making changes to bill supply. I would also note that over the past year, our cash balance has changed quite a bit. So in, I'd say, pre-global financial crisis, we endeavored to hold about $5 billion at any one time. Post-crisis, that number was significantly higher, but nowhere near as high as it had been over the past year or so. So our policy since 2015 had been to hold enough cash on hand to cover at least 1 week of outflows, subject to a minimum of about $150 billion, with an eye towards prudent risk management. But that balance was dramatically higher last year. But our policy didn't change, even though the result changed. So we hold a lot more cash. But following that same framework, our goal was to exercise caution, given the tremendous uncertainty that we had about the magnitude and timing of the outflows that we were expecting to need to meet. And so, again, much like Cristina mentioned, the way we were able to address and adapt to these changes was through making changes to our bill market issuance.
Mm-hmm. And Anthony, how has it been from your perspective? Tools there, cash balances, T-bills. What else have you used in France to manage the volatility?
Well, I think that like others, I mean, we tend to have an issuance model that try to provide an adequate equilibrium between predictability that investors are looking for and also flexibility to adapt ourselves to the changing pattern of demand and investor demand. And so the predictability thing is ensured by the amount of long-term bonds, medium and long-term bonds that is announced generally in December for the year to come. And the flexibility part is that the market is cognizant that we have 2 dates for issuing bonds, but with now predefined, let's say, a specific maturity beyond being one in a bucket of medium-term bonds and the other being in the long term. There's quite a lot of flexibility in the long term between in choosing bonds between 10-year, 20, 30, even 50-year bond. So this has worked pretty well and needed no change. Where at some point, of course, we had to change the size of a long-term issuance program during the year because of the amount of support and increase in deficit that the government had to incur. And so at some point, we had to make for a 4 revised budget act with also a revision in our issuance pattern, the latest being in November. And so we have responded to this evolution in the financing requirement of the state by increasing by 55 billion euro the size of the long-term program from an initial figure of 205 so to 260, and adjusting also upwards the T-bills market, the T-bills issuance outstanding, which is, as other mentioned, also the first line of adjustment in case of a sudden unexpected rise in financing requirement. The funny thing, if I may say so, is that the government has when we were hit by the second wave of contamination in October, and we had to prepare for additional emergency measures, the government also erred on the side of caution by increasing the amount of support to the economy. And like many others, I mean, the economy learned how, with the first phase of the crisis, how to work and how to operate within a COVID-19 environment. And the second wave was much less severe has a much less severe impact on the economy than the first one, which resulted in fact, of having, issued too much bonds and too much resources, and we ended the year with a significant cash surplus on our balance at the Banque de France.
So from all of you, I heard a lot of talks there: cash balance, bills, aiming high and then scaling back, built-in flexibility into auction schedules. But sometimes I guess that isn't enough. Sometimes we also need product innovation. We also need new forms of borrowing. Davide, has the Italian Treasury looked at any new forms of borrowing?
Yes, absolutely. We of course kept our guidelines of predictability and transparency. So we did stick to our auction calendar in a very tight way. But at the same time, of course, we had to increase the size of the auctions and to make use of syndication on a wider extent to launch new bonds. Before the pandemic, we used to use syndication just for launching long-dated bonds, so bonds with a maturity longer than 10 years, or in the linker space. Whereas we decided to extend the use of syndication also to shorter bonds than 10 years included or shorter, in order, to have a larger issuance from the very beginning for these bonds. In addition, we decided also to increase the share of our non-comp auction, which are the non-comp dedicated to primary dealers. These are free auctions that they have the day following the ordinary auction, so this has been increased. But I would think that one of the most important intervention last year was also the recurrence to a new product. And indeed, we launched this product that is completely tailored to retail investors, mostly national retail investors. It's called the BTP Futura, which was a product with a step-up coupon mechanism and a final premium, which is paid to investors that buy the bonds at issuance and keep it up to maturity. And this premium is also linked to the GDP average growth over the time of the bond. So basically, we didn't change our issuance pattern, but we changed the way we issued, the way we launched bonds, let's say. We changed something related to non-comp auctions, and we introduced these new retail bond, given the relevance of the retail investor segment in Italy, that it's very, very wealthy in terms of the amount of cash that is available on deposit accounts, and so they decide to use this liquidity pot, and these issuances so far have been pretty successful. But the retail segment is something we are keep on analyzing and studying, and it cannot exclude further innovation going forward.
I do remember that bond. That was an extremely innovative retail-focused bond. Josh, I think you're also innovating it, but in slightly less innovative ways, if I can, just a new maturity, a 20-year. Is that right? Is that part of the thinking?
That's right. And I might just note that in terms of, I'm just going back to the theme of this panel discussion, how to pay for the pandemic. While we did introduce a 20-year security last May, that was not done in response to the pandemic. That was something that we had in the works for quite a while. We'd been having discussions with internally within the Treasury Department with market participants about innovation, about additional products, and we landed on the 20-year. That product, I would just, on a side note, note, I think has been reasonably well received by the market, despite liquidity being a bit more challenged on a relative basis versus other nominal Treasury securities during times when there are bouts of volatility in the market. I think we generally expect that liquidity in this product will continue to build. But other than the introduction of a 20-year note in the US, I'd say the most significant difference from our business as usual process, our regular and predictable process, was our reliance last year on suite of, I would say, regularly issued cash management bills. Somewhat paradoxically, we typically think of in the U.S. cash management bills as being non-regular. They're not our regular suite. They are the things we issue from time to time when we have rapid short-term funding needs that can't otherwise be met or wouldn't otherwise be met by our standard suite of issuance. So we took that more idiosyncratic, irregular issuance of cash management bills and actually moved to somewhat more regular issuance of cash management bills to fill out the bill curve and to meet the significant increase in funding needs that we had last year.
Right. And on innovation, Pablo, fashionable innovation, you've done a green bond.
No, we're working on it. It's going to appear in Q4. But what I wanted to say is that there are innovations that you do to pay for the pandemic, because like us, you have 1 quarter of last year in which we had to do a lot of issuance and then realize, like Anthony and like Cristina and Davide, that we probably went too far because the macro economy went better than our worst dreams. And then we can scale back, right? So there are innovations that you do to increase the amount of issuance. Last year we did a 7-year and a 20-year for this reason, because we knew there was demand and we could create new benchmarks there to accelerate our pace of issuance. Secondly, you can do innovations to optimize your portfolio, and this is why some of us DMOs do linkers and modulate the percentage of linkers in our portfolio to reach that optimal portfolio, that chimeric optimal portfolio that some of us are trying to reach. And there are things that you do to pay for the next 30 years. And this is the green bond that France has done. France and Italy have done extremely successfully, and we aspire to follow on their footsteps as from after the summer. So we are working on it right now. It's not the best year to issue a green bond because we are competing with what it promises to be the biggest issuer of green bonds in the world, the EU Commission. And yet, this is a long-term project for us, and we intend to launch it in a liquid format as from the end of the summer.
Davide, I think you wanted to comment on that.
Yeah, no, just something I forgot to tell before, but I want to link what Pablo just said. I mean, in terms of innovation, of course, we brought to the market also some other innovation, but to be fairly honest, this innovation came back. They were, I mean, a very long-term planning. They were planned well before the pandemic. So one was, of course, the Green Bond project, and we, as you know, we launched the first bond in the beginning of March. It was a very long-dated project. Indeed, if you wanted the pandemic, it accelerated a bit the process. The second innovation was on the cash management side when we introduced our repo activity. Again, this was quite an old project, but because of the pandemic, I have to say, we decided to accelerate pretty massively there. And so now, since the end of May, we are active also on the repo as a counterparty. So yeah, I want just to add this couple of innovation which are related to the pandemic, but to be honest, they were started to be planned before.
Management, 20 years, green bond. Cristina, are you tempted by any of these innovations?
Well, we have our share of innovation, but I'd like to make 2 comments. One is about the challenge that we faced last year. Yes, we also did an extra syndication. We launched a 7-year benchmark that was not planned, that we didn't anticipate at the beginning of 2020, and it was exclusively done for the purpose of funding for the additional stimulus that the economy needed to address the challenges posed by the pandemic. But in terms of, and we also faced, in the end, we were so successful in raising and front loading the execution of our issuance program that we ended up the year with a cash buffer in excess with an excess of 7 billion euros from what we expected. So instead of lending with excess balance of 10 billion, we ended up with 17 billion, which actually poses significant challenges regarding the cash management. So in terms of how could we minimize as much as possible the cost of these additional funding that we raised, and in the end that actually casted a shadow into the execution of 2021. For instance, we had to adjust a little bit our strategy for 2021 in the sense that traditionally we opened the year with the launching of a new 10-year benchmark, and this year we decided not to do that and to postpone this project into April. So this is an additional challenge that we had to face, and that we had to that was a bit unexpected. Another in terms of innovation, I kind of like to have a word of caution. I know that here I sit a little bit as an outlier, given the fact that the Portuguese issuance program is relatively small when compared to the ones of Italy, Spain, US, or France. But given the fact that our funding plan in terms of medium and long-term instruments, it amounts to roughly 20 billion euros, we need to be a bit careful about new innovations and the slicing up of such a program, because it is true that we may be catering for the needs of new investors. Now we will be able to target a new set of needs in terms of investor needs, but at the same time we cannot alienate the more traditional investors that correspond to the bulk of our investor base. So we need to couple these two challenges. We need to strike the adequate balance between the two. We cannot continue to preserve liquidity and to privilege well-functioning lines in our conventional yield curve, and at the same time we should not be ambitious to cater for an unlimited set of needs, and to try to address all the upcoming investor segments. So I think we need to have these balance well defined, and sometimes we need to kind of take a step back and not try to be enormously innovative and take in consideration the needs that we need to privilege and need to address first.
We can't talk about green bonds, as a couple of you have, without turning it over to Anthony and the AFP's innovations in that area. Anthony, are there any more innovations? Are you going to continue to build out the curve?
No, I think in terms of product innovation, we have all the product on the shelves perfectly responding to investor demand. What strikes me in the response and comments made by the panelists is that when it comes to innovation, innovation is not something you suddenly jump in reaction to a sudden crisis. It's more something that is a long-term project that comes to fruition at some point in time, because it deserves appropriate preparation, at-home work, and it's not the kind of thing that you do very swiftly in response to a crisis. It seems, from what I understood.
Yeah, maybe we should start the innovation process long ahead of the crisis. Pablo, seeing as you've had this fantastic book in this fantastic deal in the markets, I think the order book was extremely large for it, for your print today. This is quite a common trend nowadays, though. There's a lot of very oversubscribed order books, a lot of volatility price. How has it changed the way you execute deals?
How does it change how we execute deals?
Yeah.
Yes. No, I mean, syndication is a price discovery process, and so it shouldn't surprise anyone if investors think that tightening the price is one step too far, and then they leave. It shouldn't surprise us if books go up and down throughout the book building process. What we aspire to do is apply horizontally equitable, non-intrusive, transparent rules that we can control ex ante. So we can make sure that the allocation goes to who we want it to go for the first tranche of a bond, right? This way syndications can be tapped later on via auction, because syndications shouldn't be understood for a sovereign aside from the auction process. It's all part of the same process, so that the secondary market is liquid and that primary dealers are well incentivized. So as long as everyone understands that books can increase or fall throughout a syndication, it shouldn't surprise us. What matters is the size of the book at the end of the transaction, how much you've been able to issue, what quality you've been able to issue, and what price tension you've been able to generate into a liquid secondary market. So this time, for example, it was much smoother than in January, for example, but the book ended up 74 billion big, and we've been able to issue 8 billion of very, very high quality to very high quality investors. Back in January, there was a point in which we had 130 billion of demand, which eventually came down to 60 billion. But that didn't stop us from being able to issue a very strong, very powerful 10 billion. So, as long as we're all on the same page that books can rise or fall during the book building process, I think it is quite a normal process.
I mean, you've also on the right side of some extremely large order books. How do you think about the oversubscriptions and how to manage massive oversubscriptions?
I would agree with a lot of things that Pablo just said. Internally, we have been discussing a lot regarding this phenomenon, which was pretty new. I mean, not the fact that there are large orders, but sometimes that these large orders are dropped during the book building process. So we were discussing this, and we're trying to understand whether there is something structural behind that, or if there are also temporary or say short-term trend related to that. Our initial, let's say, understanding is that maybe some short-term effects are prevailing now. We are in a regime of very low interest rates. There is a lot of search for duration. And when you carry out a syndication, you allow a lot of investors to make quite a bunch of duration in a very effective way. So it's clear that in this environment, probably there is more, competition for, or say, run to bonds than in other interest rate environments. And so for this, there are probably those speculative or more leveraged accounts that they are aware of this. And so they anticipate this kind of larger competition by themselves increasing their orders more than they normally do. And so this is why this is exacerbating this process. So I would not be, or we would not be surprised if in a different interest rate environment, probably this kind of phenomena will tend to cool down. I mean, this is our general initial thoughts regarding that. And the way we manage that, I have to say, so far, we have not changed our rules and guidelines that we communicate to investors. However, we have intensified pretty significantly the relation with several investors, especially the hedge fund community. We are having continuous contacts with them directly or through our primary dealers. The main message we're trying to convey that we try to be transparent in this transaction, and we would love to have some, reciprocity in this contest also from them. So if you have a level of rates in mind, a level of spread, we would expect some transparency, and so to be in the book with your good sensitivity and communicate it to this, because this is an element of information for us that allow us to decide where to price. So we're dealing with this kind of relation and approach with this kind of investors. And I have to say, after some weeks of this work, I think it's producing some fruits. We don't know whether we'll be successful in the long term on that. But as I said, I'm not sure that we will keep on having this situation even in other contexts. But so far, we are happy with this setup.
And Cristina, Anthony, it's a quality problem.
If I may say something, I agree with what Davide has mentioned. I think that, and if you take the cue from what Anthony was said before about innovation being a long-term process, I think that here in terms of allocation and how we conduct these syndications is also a long-term process. It's we rely on a very long-term relationship with investors. We keep investors informed. In terms of for the specific case of Portugal, we've decided to adopt caps on orders a long time ago. And the investors that participate in our syndications know that we don't allocate more than a specific amount to a specific account, irrespective of the size of the bid. And so what we see is that, although we also understand that there has been some fluctuations in the size of the order book during the building process, we understand that this is a behavior that doesn't come from participants, regular participants in our syndication. So it provides us a good indication that people or investors that are familiar with our policies tend to behave accordingly. Another thing is that I'm not sure that this is not a short-lived phenomenon, that with a change in the interest rates environment will adjust, and we will see it subsiding later. And I think we should not read too much out of the process. I think one of the things that we may be too much focus on is using the size of the book, of the order books, through the book building process as a gauge for the success of the deal. I think that should not be the focus. The focus should be as Pablo was mentioning, to produce the right tension, and in terms of the price discovery process, in a way to make the best out of this process, in a way that we achieve the minimization of costs in order to have a transparent price discovery process. That should be the focus. And what we should also, and if you are looking for a better gauge of success, it should be the secondary market performance. If a bond performed in the secondary market, it means that it was adequately allocated, and that it was we faced a very solid demand, and the price was the adequate one. Thank you.
It is a topic we could talk a lot about, but there are two topics I really want to try and squeeze in the last few minutes if I can. First one is inflation. Such a hot topic at the moment. Some issue inflation-linked bonds, some don't. Josh, you're I guess the largest issuer of inflation-linked bonds in the world. What proportion of your issuance is tipped, and more importantly, how do you arrive at that proportion?
Sure. So I will say, maybe just to step back for a second and think about our response to the pandemic and the funding shock. So first, we did not increase tips, even on a gross basis, last year in response to the pandemic. So to meet the immediate funding needs, we generally kept the supply of tips unchanged in response to the pandemic, largely because tips tend to have a different liquidity profile than nominals. So we tend to take a more gradual approach with respect to changing tips auction sizes versus the supply of nominal securities. That said, while we kept this supply unchanged through the course of 2020, last November, we had announced that over the course of 21, our plan was to increase gross issuance of tips by about $10 to $20 billion over the course of this year, and we're well on track to meet that. From a sizing perspective, the feedback we tend to get from the market the recommendations that we get are to think about stabilizing TIPS as a supply of debt outstanding. I think, as I said, it dipped a bit immediately in the aftermath of the pandemic funding needs, but it's coming back up, and we generally expect that will stabilize.
If anybody else has any comments about the amount of inflation-linked bond issuance they want to do, or that they might do. I know, Cristina, you don't at the moment.
And don't plan to do in the immediate future.
And Anthony?
Yeah, maybe just one comment. The market completely reversed from last year trend. It's a market that is characterized by a lot of procyclicity, and it's something we observe very, very regularly around the economic cycle. So we have seen the same pattern last year as we had seen back in 2009, when the market simply collapsed after, or the investor demand collapsed after the great sovereign crisis. And of course, fortunately, there was still a buyer in through the central bank buying program last year. Otherwise, I think we could have issued only a very limited amount of linkers. This year, and because of the inflation risk being back on the radar screen, the market has completely changed. And you see now a lot of different investors trying to hedge from that risk, although it is perceived as a tail risk, but nevertheless, it's a scenario where they want to be protected against, and so there is a renewed appetite for this type of security, and we are happy to go along and to respond to this investor demand, and we are currently close to the target we have assigned ourselves, that is to say, issuing around 10% of our program through linkers.
We've only got a couple of minutes left. David, I know you're a big advocate. Thoughts on linkers issuance?
Yeah, no, just 2 seconds to tell you that I completely agree with what Anthony said, and we have behaved more or less in the same way. We haven't issued much in 2020 despite the large funding needs, and instead we have started raising our funding in 2021 because, as Anthony was saying, the market's really reversed. And in our case, we have also seen a dramatic tightening of the spread between nominal and linkers. So also from a cost perspective, the situation has rather changed. But of course, this is the result of an increasing demand. But so we also seen demand on asset swap basis increasing. So for all these reasons, we have decided to be more proactive in this segment. And indeed, we launched our new 30-year after a long while. And it went really well, and we are still seeing a lot of demand in the market. So definitely within our boundaries, but we'll keep on giving a look at the inflation market very carefully in the next months, potentially even with new bonds.
Thank you for that. I'm deeply frustrated that I have to keep 45-minute time limit. We have run out of time now. We have to stick to our allotted time. But thank you very much for your comments, fascinating comments. There's so many more topics we could cover. Really appreciate that. And we can continue the dialogue in the chat rooms online and our future events. Thank you all very much. And thank you all very much for watching today.